Hey there, iguanas! Iggy here, and do I have a treat for you today? In this video, we'll embark on a thrilling journey through the world of Singapore's banking behemoths, DBS, UOB, and OCBC, as they set their sights on conquering the Southeast Asian market. I'll break down their ambitious expansion plans, reveal the strategies they're using to penetrate the ASEAN region, and show you how their moves could impact your investments. So grab your favorite snack, get comfortable, and let's dive into this exciting adventure together. Picture this. You're a big fish in a small pond, but you've got your sights set on conquering the entire ocean. Well, that's exactly what DBS, UOB, and OCBC, Singapore's three largest banks, are doing. They're not content with just being the top dogs in their home market. They want to spread their wings and soar across Southeast Asia. These banking giants have recognized the immense potential for growth and profitability in the region, and they're determined to make their mark. So, what's their game plan? It's all about trade finance and wealth management. These banks have identified these areas as key drivers of growth in Southeast Asia, and they're ready to capitalize on the opportunities they present. Trade finance, which involves providing financial services to facilitate international trade, is a lucrative business in a region that is experiencing rapid economic growth and increasing cross-border commerce. Meanwhile, wealth management services are in high demand among the region's growing middle class and high net worth individuals who are looking for ways to preserve and grow their assets. DBS, UOB, and OCBC are not just dipping their toes in the water. They're diving in headfirst, aiming to become the go-to regional banks in Southeast Asia. They're investing heavily in expanding their presence in countries like Indonesia, Malaysia, and Vietnam, either through acquisitions of local banks or by establishing their own branches and subsidiaries. These banks are also ramping up their digital capabilities to better serve their customers across the region, offering mobile banking apps, online trading platforms, and robo-advisory services. To support their regional ambitions, these banks are also actively hiring local talent and experts who have deep knowledge of the Southeast Asian market. They're building teams of relationship managers, product specialists, and risk management professionals who can navigate the complex regulatory and cultural landscapes of each country. By combining their expertise in trade finance and wealth management with a strong on-the-ground presence and a deep understanding of local markets, DBS, UOB, and OCBC are positioning themselves to be the dominant players in Southeast Asia's banking industry. Now, expanding into new territories isn't a walk in the park. It takes some serious strategizing and resources. That's why these banks are on the hunt for acquisitions and talent in neighboring countries. They're scouting for the best and brightest to join their teams and help them conquer new markets. Acquiring local banks or financial institutions in target countries is one key strategy. This allows the Singaporean banks to quickly gain a foothold, tap into existing customer bases, and leverage established infrastructure. For example, UOB acquired Citigroup's consumer banking businesses in Indonesia, Malaysia, Thailand, and Vietnam in 2022, accelerating its regional expansion plans by 5 years. But acquisitions alone aren't enough. The banks also need to build strong local teams to navigate the unique challenges and opportunities in each market. They're actively hiring top talent across Southeast Asia, from relationship managers to digital banking experts. By combining local knowledge with the bank's expertise and resources, they aim to provide a seamless and competitive banking experience for customers across the region. Let's take a closer look at UOB, one of the three banking musketeers. Their CEO, Wee Cheong, isn't messing around. He's got his eyes on the prize, ASEAN market penetration. And he knows that the competition is fierce. But UOB is ready to rumble. They're gearing up to take on the challenges and emerge victorious. So, what does this mean for you, my fellow iguanas? Well, as savvy investors, it's crucial to keep an eye on these regional expansion plans. When big players like DBS, UOB, and OCBC make moves, it can have a ripple effect on the entire financial landscape. By understanding their strategies and the potential impact on various industries, you can make informed decisions about your own investments. Based on the latest analyst ratings and research, Here is an updated analysis of the 2024 stock price outlook for DBS, UOB, and OCBC, Singapore's three largest banks. Analysts have a moderately bullish view on DBS, with a consensus moderate buy rating. The average 12-month price target is $38.60, representing an 890% upside from the current price of $35.45. Price targets range from a low of $35.97 to a high of $42.83, and earnings estimates for DBS are $990 per share next quarter. Overall, analysts expect DBS to outperform the market over the next year. The outlook for UOB is also positive, with analysts giving it a consensus strong buy rating. The 12-month average price target is $34.3, implying an 11.87% upside from the current price of $33.60. Analyst price targets span from $3,400 to $3,490. For 2024, UOB management is guiding for low single-digit loan growth, double-digit fee growth, and a cost-to-income ratio of around 41%. Stable asset quality and a well-diversified loan portfolio support the bullish view. Similarly, analysts are bullish on OCBC with a consensus strong buy rating. The average price target of 15.61 points to a 10.22% upside from the current as 14.20 price. Individual price targets range from 14.89 to 16.58, and quarterly earnings are projected at $9.99 per share by end 2026. Like its peers, OCBC is expected to outperform the broader market. In summary, analysts have a positive view on all three Singapore banking giants for 2024, driven by expectations of loan growth, fee income expansion, and stable asset quality. The consensus is that DBS, UOB, and OCBC will see their stock prices rise 8–12% over the next 12 months. However, investors should monitor execution on regional expansion plans, net interest margin trends, and any deterioration in asset quality, as these factors could alter the outlook. As always, analyst forecasts are opinions and actual results may differ, so investors should conduct their own due diligence. All right, Iguanas, that's a wrap. Today, we explored the thrilling world of Singapore's banking giants and their audacious plans to conquer Southeast Asia. DBS, UOB, and OCBC are making bold moves, and as savvy investors, it's crucial for us to stay on top of these developments. Remember, knowledge is power, and by understanding the strategies and potential impact of these banking behemoths, you'll be better equipped to make informed investment decisions. If you found this video insightful and want to stay up to date with the latest investing trends, be sure to smash that like button and subscribe to the Investing Iguana channel. Your support means the world to me, and I promise to keep bringing you the best investing content out there. Until next time, keep investing wisely, and remember, the world of finance is your oyster.